Hello everyone, welcome to the Ichimoku.co and Forex Trading TV Daily FX Market Review for the trading day ending Thursday, May 22nd. Firstly, Euro US dollar, and here we see a fairly large black body candle following the market attempting to rally to the top of the cloud and being rejected from there. Finding support for the previous day's trading at the 136.45 level and continuing in a bearish manner down below the 136.83 level of resistance, an area that the market was rejected from today. Finding support once again at 136.45. Possibility of a test down to 136 if the sellers can go on with this move. The character of this candle is substantially different than the previous candles from approximately a week ago. And we see very small body candles as the market was attempting to rally into the cloud and being rejected from there, and the sellers seem to have built some downside momentum with this current candle closing with control. There is a good possibility if we can see a close and a solid bearish close down below the 136.45 level, we could see this market testing down to 136. We do have a bearish market in all three timeframes, and the Chica span is confirming the negative price action that we're seeing. So this 136.45 level is crucial to this market. Next, moving to the US dollar, Japanese yen, and here we've seen the buyers come back into the market today. A change of trend to the upside, and the buyers taking control as they tested above the 101.65 level. There is a possibility of this market rallying. We have a bullish market in the short-term time frame now, and we haven't seen that for quite some time. But we do need to watch the potential resistance at the Kijun-sen, which is trading at 101.91. If the market can brag out to the upside above there, we could see this market trading up to the 102.19 level. But the likely scenario here is with the market trading below the cloud and the Kijun-sen that we rally towards a Kijun-sen. We see some capitulation there, and the buyers start to lose some strength, and then we see the sellers come in once again. Very strong support down below the 101.17 level has been tested on multiple occasions, and as has the 100.74 level. Next, the Aussie dollar, US dollar, and here we see a fairly solid black body candle, but on a change of trend to the upside. So that hammer type pattern that we saw yesterday has proven to be a good, reliable reversal pattern. We have had confirmation of that with the change of trend. Unfortunately, though, it has occurred on a black body candle where the sellers have made net momentum. The sellers have closed with control of the market, but importantly, they failed to close down below the 92.21 level. We have seen upside price rejection from there for today's trading, for yesterday's trading, and in the recent past, and it does suggest that that is a very, very important level. We do have a neutral market in big picture terms, with the market now trading within the cloud and bearish in the medium and fast term timeframes. The rally or any rally that we may see could be halted at the 92.78 level as we saw for today's trading. So there is some solid resistance overhead for the Aussie dollar and also solid support down below. Next to the US dollar, Swiss franc, and if we look at the character of these candles as the market's been trading outside of the Ichimoku cloud, all indecisive type candles, spinning top candles, a doji candle, and very, very indecisive candles. But this market has been rallying, and it really does say something about the ineffectiveness of the sellers. You would have thought that the sellers would have been strong enough to change the trend in at least one of these candles, where the buyers really have been pushing the market higher, but really doing it in a very indecisive manner. Now, we have seen the market close above the 89.35 level today, and that could be important. It has occurred, however, on an indecisive candle, but as this current session is developing, we are seeing bullish activity up above that 89.35 level, so there is a possibility of a test back up to the 89.65 area. We do have a bullish market in all three timeframes, and looking at the angle of the Tenkan-sen has been pointing out very sharply, reflecting the solid upside trend, even though it has been on indecisive candles. And it does suggest that if the market does come off, we should see very strong support at the Tenkan-sen at 89.13. All of this strong price activity above the Ichimoku indicators is confirmed by the Chica span trading above the corresponding price action.